Welcome to today's video on cryptocurrency trading, where we will discuss how to make a profit in the exciting world of digital currencies. With the rise of Bitcoin, Ethereum, and other cryptocurrencies, there is a growing interest in trading these assets. In this video, we'll cover the basics of cryptocurrency trading and provide tips on how to maximize your profits. What is cryptocurrency trading? Cryptocurrency trading is a way to make money by buying and selling digital assets like Bitcoin, Ethereum, and Litecoin. By taking advantage of the volatility in the market, investors can use their strategies to make a profit from their trades. Traders need to understand all of the different factors that affect the value of cryptocurrency in order to make successful trades. It's important for traders to do research into different types of cryptocurrencies and how they work before investing any money. This includes understanding the risks associated with each type of currency and how it may be affected by external forces such as governments or banks. Additionally, it's important for traders to stay up to date on news related to currencies so that they can identify opportunities for profitable trades before anyone else does. Traders should also get familiar with the different online trading platforms where they can easily buy and sell cryptocurrencies. Most of the time, these platforms have features like charts and analytics tools that let users look at trends before making trades. Some platforms also let traders practice trading without risking real money until they feel confident enough to start trading with real money. Types of cryptocurrencies. Bitcoin. Bitcoin is the first and most widely recognized cryptocurrency, created in 2009 by an anonymous group of developers. It uses a decentralized blockchain ledger to keep track of transactions, so people can send money anywhere in the world without being tracked. The value of Bitcoin has seen massive highs and lows over the years, making it an attractive investment opportunity for traders who are willing to take on risk. Altcoins. Altcoins are any cryptocurrencies other than Bitcoin. There are thousands of different altcoins available today. Some popular examples include Ethereum, Litecoin, Monero, Zcash, Dash, and Ripple. These coins have a variety of features that differentiate them from Bitcoin. Some have faster transaction speeds or offer more anonymity than Bitcoin does. Investing in altcoins can be risky but also rewarding if you pick the right coin at the right time. Stable coins. Stable coins are designed to provide stability by pegging their value to another asset, such as fiat currency or gold reserves. This means that their value doesn't change as much as other cryptocurrencies do when the market changes. Their price usually stays the same no matter what the market is doing. As a result, they are appealing investments for those looking to protect their capital or take advantage of arbitrage opportunities with minimal risk. Benefits of trading cryptocurrency. One of the best things about trading cryptocurrencies is that you can make a lot of money. Cryptocurrencies are highly volatile, meaning that their prices can go up or down drastically in a short period of time. This creates an opportunity for investors to make significant profits by buying and selling cryptocurrencies at the right times. Additionally, because many cryptocurrencies are decentralized, there may be fewer regulations in place when trading them compared to traditional currencies, providing traders with more freedom to make trades as they see fit. Cryptocurrency trading also offers a great deal of flexibility. Many cryptocurrency exchanges let traders trade on margin and use leverage to make their positions bigger than they would be able to afford on their own. This can make potential profits and losses a lot bigger, but it takes discipline and careful risk management. Furthermore, with 24/7 global markets and access to digital wallets, it's easier than ever for traders of all kinds. From firms managing investments on behalf of institutional clients to individuals looking for extra income, to get involved in cryptocurrency trading whenever they want or need to do so. Steps to take before trading. Research. Take the time to learn as much as you can about any trading platform, currency, or exchange you plan to use. Look for reviews from other traders, check out the company's website, and familiarize yourself with its features and fees. 2. Set a budget. Establish a budget that allows you to trade comfortably with money and won't affect your daily life. Don't put all of your eggs in one basket and avoid trading on margin, as it can quickly lead to large losses if not managed properly. 3. Educate yourself. Get acquainted with different terminologies related to cryptocurrency trading such as support, resistance, bearish, and bullish. Read books, watch videos or enroll in online courses that will help you understand more about trading strategies and risk management techniques used by experienced traders. This will increase your chances of making a profit when trading cryptocurrencies. How to trade cryptocurrency. When trading cryptocurrencies, the key to success is researching and understanding the market. It's important to understand the different types of coins and tokens available, as well as their functions and use cases. Also, traders need to know how to use the different exchanges where they can buy and sell digital assets. Before investing in cryptocurrencies, it's important to know when to place buy, sell orders. Being aware of current news and events will also help traders choose the best times to enter and leave the market. Finally, risk management is a critical component of successful cryptocurrency trading. By setting stop losses or using a trailing stop loss strategy, traders can limit their losses in volatile markets. Determining buy and sell points. When deciding when to buy and sell cryptocurrency, two key things must be taken into account: market trends and how to handle risks. It is essential to identify the long-term trend in the currency's price movement, as well as its current support and resistance levels. This will help traders determine whether they should buy or sell at a particular point. Traders can also use technical analysis tools such as Fibonacci retracement, the Moving Average Convergence Divergence (MACD) indicator, the Relative Strength Index (RSI), Bollinger Bands, and the Ichimoku Cloud to find entry points into trades. These indicators measure short-term trends, such as momentum or volatility, of the currency pair being traded, providing helpful information on when it is most profitable to enter or exit a trade. It is important for traders to keep their risk appetite in mind while making decisions about when to buy or sell their cryptocurrency holdings. Trading without managing risks well could lead to big losses that might not be easy to make up for with other profitable trades. To avoid this, traders must set stop-loss orders that close a position automatically if it falls below a certain level. This limits the amount of money that a trade could lose. Strategies for maximizing profits. One way to make the most money when trading cryptocurrencies is to buy low and sell high. This means that traders should monitor the market closely and purchase coins as soon as they go on sale, then wait until prices rise before selling them. Traders can also set up automated systems to do this work for them. This lets them make money without having to keep an eye on the markets all the time. Another strategy for making a profit from cryptocurrency trading is to diversify investments across different coins. By investing in more than one digital currency, traders can lower their risk of losing money if one coin fails while still making money when another coin's value goes up. Diversifying investments can also help traders take advantage of any opportunities that may come from new technologies or coins that come out over time. Finally, traders should also pay attention to trends from other successful traders and keep track of news about the crypto market in order to be well informed about any potential changes or developments that may affect their investments. By staying abreast of current events and keeping an eye on what other successful investors are doing, it's easier for traders to maximize their profits by taking advantage of any positive shifts or changes within the industry as soon as they occur. Dangers to look out for. One of the most significant dangers to look out for when trading cryptocurrencies is market risk. Cryptocurrency prices can change a lot, so you should always have an emergency fund to cover any losses that might happen if the price drops a lot. Also, it's important to keep an eye on your trading strategy so you don't make any mistakes that could cost you a lot of money. Furthermore, you should be aware of malicious actors looking to target cryptocurrency traders. Scammers often use things like phishing emails and other methods to get traders' personal information and money. It's essential to be careful when dealing with untrusted sources and to research any potential investments before committing funds. Lastly, crypto exchanges are often hacked, so it's important to choose one that uses strong security protocols to protect user data and funds. In conclusion, trading in cryptocurrencies can be profitable, but you need to know the market well and choose the right way to invest. You can increase your chances of making money in the exciting world of digital currencies by doing research on the cryptocurrencies you want to trade, timing your trades, managing your risk, and using trading tools and resources. Thanks for watching, and happy trading.